This is the AI News Flash for May 8th, 1 p.m. UTC. First up, NVIDIA announces a strategic investment of up to $2.1 billion in AI cloud company IREN, marking one of the largest AI data center deals to date. According to Quartz, NVIDIA and IREN have signed a multi-year AI infrastructure partnership, with NVIDIA committing up to $2.1 billion. IREN gains early access rights to NVIDIA's most advanced Blackwell and Vera Rubin GPUs, accelerating its inference capacity offerings for hyperscaler customers. IREN shares surged following the Barron's report, with year-to-date gains now exceeding 100%. IREN is a leading example of a former Bitcoin mining company pivoting to AI cloud services, joining the rapidly growing NeoCloud tier alongside CoreWeave, Nebius, Lambda Labs, Akamai, and TeraWulf, with hyperscalers committing $725 billion in 2026 capex. Independent AI cloud operators with secured NVIDIA GPU supply are seeing soaring investor valuations. However, NVIDIA's strategic investment portfolio, including the $100 billion OpenAI deal, the AMD OpenAI chip contract, and the Oracle AI Supercluster project, is also reigniting circular trade concerns. Amid warnings from Fed's Goolsbee on diminishing returns and IMF's Global Financial Stability Report, the AI infrastructure dominance race and its sustainability are at a critical juncture. Next, the White House is undertaking a major reset of AI regulation policy in response to a new breed of AI hacking tools, signaling a strategic shift for the Trump administration. Per Washington Post and Axios reports, Anthropic's frontier AI model, Mythos, has demonstrated vulnerability discovery capabilities surpassing human cybersecurity experts and was reportedly exploited in cyber attacks targeting a Mexican water utility. In response, the Trump administration is fundamentally rethinking its frameworks for AI model capability, assessment, export controls, and national security review. The shift moves away from a deregulation-first approach toward incorporating dual-use and cyber threat assessments of frontier AI models. The Commerce Department's Bureau of Industry and Security, the National Security Council, and the AI Action Plan team are reportedly drafting new regulatory frameworks. The move aligns directly with the broader U.S.-China AI technology rivalry and tightening AI model export controls to China. As 48% of security experts predicted agentic AI would become the largest attack vector in 2026. That prediction is now materializing. New frameworks for AI model, misuse detection, and critical infrastructure defense are emerging as urgent priorities. With the AI political environment shifting rapidly, AI regulation lobbying for the 2026 midterm elections is also expanding sharply. Third, the U.S. Securities and Exchange Commission is now formally examining registered investment advisors, or RIAs, for AI governance during routine inspections. Wealth Management reports that SEC examiners are specifically requesting 4 items: written AI acceptable use policies, vendor oversight documentation for third-party AI tools, supervisory procedures for human review of AI-assisted recommendations, and staff training records. The SEC's 2026 examination priorities explicitly name AI governance as a focus area. With Regulation SP amendments on vendor oversight requirements coming into effect on June 3, 2026, RIAs without documented AI governance are immediately receiving examination findings. New AI-specific SEC rules are not expected before 2029 at the earliest. A particular concern is shadow AI, unapproved tools advisors use on personal devices to handle client data, which the article notes is occurring at virtually every RIA. This aligns with Goldman Sachs' shift from AI usage tracking to outcome-focused metrics, JP Morgan's 200,000 employee LLM rollout, Morgan Stanley's 2,500 layoffs, and HSBC's 20,000 reductions. As Wall Street enters a second phase of AI implementation, the SEC's regulatory enforcement on AI governance marks a critical turning point for AI-native transformation in wealth management. Fourth, major AI evaluation and observability platform Braintrust has disclosed a data breach urgently prompting customers to rotate API keys. According to Security Week, hackers gained unauthorized access to one of Braintrust's internal AWS accounts on May 4th, potentially exposing organization-level AI provider API keys. Affected customers reportedly include AI-forward companies such as Box, Cloudflare, Dropbox, Notion, Ramp, and Stripe. At least one customer has confirmed impact, and 3 more reported suspicious spikes in AI provider usage. Braintrust has urgently advised all organization administrators to access organization-level settings, delete or revoke existing secrets, configure new API keys, and verify rotation by checking timestamps. The incident exposes a new attack surface where AI evaluation and observability tools become vectors for supply chain compromise of multiple downstream customers' LLM provider accounts simultaneously. Following the Dragos report on AI-assisted cyber attacks targeting Mexican water utilities, the 48% prediction by security experts that agentic AI would be the largest attack vector in 2026, and the Anthropic Claude Chrome extension vulnerability disclosure, the trend of deepening supply chain security risks across the AI ecosystem is becoming clearly apparent. Fifth, Cloudflare's Q1 earnings disappointed investors betting on AI boost as growth slowed, contrasting sharply with Datadog's Q1 beat. Reuters reports that Cloudflare's Q1 revenue growth came in below analyst expectations, disappointing investors who had been counting on an AI infrastructure demand tailwind. The stock fell sharply in after-hours trading. In contrast, Datadog topped $1 billion in quarterly revenue for the first time and announced major land deals with two of the world's largest superintelligence labs, sending its stock surging 29.3%. A stark divergence in earnings outcomes. Both companies operate in the infrastructure and observability SaaS layer, but their direct exposure to AI workloads and ability to win major land deals have produced sharply different outcomes. Amid ServiceNow CEO McDermott's pushback against the SaaSpocalypse narrative and the ongoing AI disruption debate around Salesforce, Workday, and Adobe's success and failure cases of AI implementation among SaaS companies are now directly translating into investor valuations in remarkably clear ways. The speed of AI-native feature integration, the ability to capture enterprise AI training and inference workloads, and the pace of agentic AI feature monetization are entering a new era as primary determinants of SaaS company stock performance, alongside Akamai Technologies' 30% stock surge on its 7-year, $1.8 billion deal announcement. A serious selection phase is now underway for AI infrastructure layer stocks. That's all for this AI news flash.